What's up, guys? Good morning. Good morning. I'm just waking up a little bit. All right, so yeah, we got CPI inflation data showing up this morning. Expectations for this data are for 2.9%. Year over year. Headline and 0.3%. Core CPI is expected also at 0.3% and 3.1% year over year. This data drops at 8:30 Eastern Standard Time. All right, so we should be good with this. Yeah, it's time I needed a haircut. Catching up on the chat. Got a lot of comments here. What's up, Keith? Yeah, I mean, I think this report generally is going to be larger than the report from yesterday. Again, headline CPI expected at 0.3% month over month. Year over year is expected at 2.9% for headline. It was 2.7% last month. Core CPI expected at 0.3% as well, but there's also expectations of 0.4%. Core CPI year over year expected at 3.1%. So tariff effect in core goods. Analysts are expecting cost and goods category exposed to recent tariffs like households, furnishing, communications, apparel may drive noticeable increase. Shelter inflation trends are going to be relevant. Are rents and housing related costs continuing to rise? I think that affects a lot of people, are cooling off, which could help drag down core inflation. Food and energy. Energy is more volatile month to month. Food can surprise, so this move will affect headline CPI heavily. We want to look at service inflation because services inflation is relevant. If services inflation, non-household services especially slows, that suggests inflation is less broad-based and less worrisome. But again, if inflation comes in hot today, it could reduce chances of a rate cut next week on Wednesday. If it comes in weaker than expected, lower than expected, that could push back odds of rate cuts. We also can look at yields this morning. If we take a look at the 10-year Treasury yields, they're basically where they were yesterday when we ended the day. Um, 4.05%. 4.05%. Yeah, we're basically unmoved relative to yesterday. We've kind of gone up and down, but yields are unchanged. CME watch tool still show a 92% chance of a 25 basis point cut, 8% chance of a pause this morning. Yeah, that was terrible, man. That was terrible about Charlie. And again, I'm not very political, but that was just horrible, man. Like, I saw the video, it was terrible. One of those just shocking videos. And it kind of goes to show, like, some people celebrating it. I mean, you guys must not have watched Hunger Games enough to understand, like, it's bad when this stuff happens. It's not good, regardless of which side you're on. Like, none of that's good. You get some people saying fascism, that he was fascist, right? But one of the playbooks of fascism is silencing political opposition. And so I think you got to just look at things objectively and just frown on this overall. Just overall frown on it, regardless of which side you're on. I hope his family, I'm sure they're in struggles right now, so Wish them the best. But I'm not going to go too deep on it. It's political, you know. I'm going to just leave my comments at that. And yeah. Rest in peace. But yeah, so we're rejecting right here at 950s. We're at 941s. We got the 200 exponential at 931s. NVIDIA at 178. Yeah, I mean, markets are kind of flat today as well, though. I mean, I'm looking at stuff. Let me make sure I'm right about this. Yeah, SPY slightly up. Q is slightly up. I think rate cut, like I said yesterday, I think it's pretty probable we're going to cut rates next week. I don't think this data is going to change it. The only way it would is if it comes in super hot. Yeah, the only way we're going to change this data is if we come in super hot, you know. And even if we do, I still think there's probably a pretty good chance that we're still going to cut rates next week. We might just not cut 50. But yeah. Yeah, let me get a timer up. We got the numbers at the bottom. You can see the expected numbers at the bottom. And, yeah. There's the timer. We might be able to shrink this. There we go. Yeah. My kids had already heard about it by the time they got back from school. So. Yeah, it's terrible. Do you think the market expects a 50 basis point cut? There's only about an 8% chance of a 50 basis point cut as of today. Now, this inflation data could certainly change those expectations, but there's about a 8% chance right now. So it's about 92 to 8% odds of a 25 versus 50 basis point cut. And so it's pretty unlikely we're going to cut 50, but it's possible. And, you know, if we get high inflation data today, that's going to push back the odds of 50. If we get low inflation today, that might increase the odds of 50. But we'll see. We'll see. Can you be bullish and bearish at the same time? I think maybe on gold you can be right now. Gold is at 3650s. It's pulled back heavily into this report, probably because of low inflation data yesterday, kind of easing it down a little bit. I don't really have a bias on the NASDAQ. I think we're close to 24,000, but I think today's inflation report is important. And so I think it really depends on a lot of different stuff. I think we got to wait for the data to come out, and we'll have to see what it looks like first. It depends on the, you know, I don't know which way the NASDAQ's going to go based off of this data. I really don't. But we're going to cover it as soon as it drops. Oracle, you know, one of the big movers yesterday, still at 333s here, which is wild. So it had another green day yesterday. We had GameStop back down to 24s. Synopsis bouncing, and some other stuff, but yields are basically unchanged. Oil is under pressure, though. If we take a look at oil dropped a little bit back down to 63, and these are lower levels for oil. I think as expected, but if it's true, they manipulated. I mean, I don't know if I necessarily agree with that. Yeah, I don't know. Look at October Fed Watch. There's a chance for a 75 basis point cut now. Yeah, well, what that means, they're just looking at where the Fed funds rate might be by October, right? So the reason there's a 75 basis point chance in October doesn't mean that they're going to cut rates 75 basis points in October. It means that there's an 8% chance of a 50 basis point cut next week on Wednesday. And so what they're saying is that they think they could cut rates 50 basis points next Wednesday. There's about an 8% chance of that. And if so, by October, we're going to be down to 375 to 400. So we do a 50 and then a 25 is what they're saying. We're not going to cut rates 75 in one meeting, but they're saying it would be 50 and then 25 in October is what this is. Yeah, so here's this would be a 25 basis point cut by October. This would be 50, and then this would be 75. So that's what they're pricing in. Because currently we are at 425 and 450. So if it's announced as predicted, 0.3% is likely the Fed will cut. Yes. If it's 0.3%, it's gonna basically confirm rate cuts next week, I think. You know. All right, so we got some news about tariffs going on. So I'm seeing some news that Mexico is lifting China tariffs to 50% as South Korea says the U.S. raids may hurt the trade deal. Switzerland is proposing that its gold businesses build a refinery in the U.S. and increase its processing, capabilities to help reduce U.S. tariffs, according to some people or some sources, basically. And this is after last month, the president put up almost 40% tariffs on Swiss imports due to trade deficit with Switzerland. Mexico also said yesterday that they're going to raise tariffs on automobiles from China and other Asian countries to 50%. A lot of people say this is kind of appeasing the U.S. We'll see what happens there on these tariff updates. Melius research analyst Ben Wrights believes Apple stock could reach $290 by increased revenues from his new iPhone and others. It says Apple's officially out the woods after the iPhone launch, and it's setting up to make higher revenues. We'll see if that's true. Look at oil falling down here. So oil dropping this morning. European Union Commission spokesperson says Europe will not reduce its own standards about cars built up over decades over the trade deal with the United States. Did they rename Octo? Alright, I also see a U.S. President envoy told Belarus president that the U.S. wants to reopen an embassy in Minsk. Yeah, Octo gave back most of its gains. I mean, this was pretty predictable here. Like, what I really have to ask is who's buying Octo up here? Right? Like, looking at a longer term chart. Who's buying Octo here? You know what I mean? A stock goes from $1.30 to $83 in 48 hours. And who decides to buy it up there? Because this was never going to hold. You never knew when it was going to stop either. That's something I told you guys. Like, you never know when it's going to stop. But what we do know is that it's not going to hold. I wish these were shortable, because it would be some of the easiest money. You'd have to take a small enough trade to set some loose areas. So like, even if it does run, time is going to heal a lot of those wounds, because these things, look, I've watched these things for years. Penny stocks are what I originally got involved with trading. And one thing I know is that they never, ever hold. You know why they never hold? It's because most of the time, big moves like this, a lot of the time, insiders in the company are the ones pumping these stocks up. They hold the most shares, and so they know their company might not succeed long term. And so what they do is they artificially inflate it. Maybe, I'm not saying they're doing this, allegedly, you know, not an investment professional. I might be wrong here, but what they do a lot of the time is they artificially inflate it. They pump it up, and then when it's at the tippity top, they unload all their shares, which could be what happened here. And then they leave everybody holding the bag, and then that way they get out. They make millions from it, and all the penny stock chasers kind of get caught. Is what happens. So, speaking of Apple down to 227s. Is it worth buying the dip after the iPhone ceremony? I don't know. I'm watching 950 up here. 950 looks relevant. Is the rate cut a sell the news event? Yeah, there's not going to be options. It's too, you know. Most of the time, Apple dips after its iPhone events. It rarely holds. So AbbVie settles litigation with genetic manufacturers, according to an SEC filing. So that's good for AbbVie. I'm looking at other news here. I'm expecting a lot of the news to be political today, but remember, we got CPI inflation, 8:30 Eastern Standard Time. FOMO and newer traders always get wrecked in stocks like that. Those are accounts. Yeah, for sure. Yeah. I remember attacking those things, man. You're almost always late, and you're trying to find, like, they hype you up so much. They're like, oh, this one's running, and I mentioned it 45 minutes ago in a tweet. And it's like, okay, you know, but by the time you see it, it's over. It's done, you know. You jump in, it goes down 20%, 30%. Yeah, we got the timer up. We got 55 minutes left until CPI inflation. See what inflation shows up as, though. I'm curious about this. I want to see what inflation shows up as. Yesterday, PPI inflation showed up shockingly low. Shockingly low. They also revised the last really hot month down a little bit. And so, yeah. So some people are saying that today's August inflation report may show tariff price pass-through pressures intensifying. Expectations of a 25 basis point cut on Wednesday next week have become, you know, pretty high, you know, odds at least. But if we get hotter than expected inflation today, that could temper those expectations a little bit. They're thinking 0.3% today for month-over-month headline CPI. That's a 0.1% jump up from 0.2% last time. Core CPI, which excludes food and energy, is also expected to go up 0.3% month-over-month for a second consecutive month. Annually, headline CPI is expected to be 2.9%. Core is expected at 3.1% year over year. So, again, we'll see what happens. Data shows up at 8:30 Eastern Standard Time. I need to take something off here. Alright, so that should have fixed it. I'm trying to fix my yellow scrolling letters at the bottom here. Oh yeah, let me do a poll. My bad, guys. Does today's CPI inflation go up higher than the 0.3% expected? All right, so that's the poll right now. Does today's CPI inflation show up higher or lower than the 0.3% month over month expected? Vote in the poll. That poll is now live. You can vote on it. If CPI continues to be good, another all-time high, maybe. Someone that saw the Solana at the top. Solana looks good so far. Yeah, it's been running, hasn't it? Yeah, well, I bought Marvel and then I scaled out of it. And so I'm, you know, I got in and out. I'm not really one to, you know. Synopsis is down pretty significantly, though. I don't know much about Synopsis. So it's symbol SNPS. I see it down big, and maybe it's time to buy it up, but it's up a lot this morning already. Yeah, I mean, Synopsis makes a lot of money, but what's the PE ratio? What the revenue look like? Their PE ratio is currently over 60, so their PE ratio is not good. You know, depends on which one you look at. Forward PE is about 35. So it's not as bad, but it's still not what I would call good. Let's look at their revenue. Their revenue is pretty solid, though. And that's a big dip. Let me ask AI. What's their last four? I can calculate their PE. Again, here's Synopsis. Look at this drop, though. I mean, very large drop. All right, so let's calculate the PE. So I'm showing 339 plus 367 plus 303 plus 340. All right, that gives us a 13.5 roughly yearly EPS 13.5. You divide it by the current price, which is about 407. And it gives S&PS a PE ratio of about 30, which isn't terrible. It's not great, but it's not horrible. Maybe there's an argument for a dip buy. It'd have to be small. This thing's got a huge freaking range right now, though, man. The range on this thing is big. So, you know, there might be an argument for a dip buy here, but it'd have to be small size, I think, personally, right? Yeah, it'd need to be small size, personally. What do you guys think? It's down a lot. It's usually, like, I like buying stuff like this, but... Guys will have a crash at some point. Better to sit on the cash if you're hungry to trade. Yeah, maybe. I don't know. Yeah, put it in 2x speed. Hit the live button. The news stories aren't 5 minutes late, bro. Get out of here. Bro, we cover CPI inflation literally as soon as it comes out. We cover PPI inflation literally as soon as it comes out. Yesterday we had the PPI data before everybody else. You could see the reaction too. You can see when we reported it, and then we got a reaction to it. And so, you're welcome. Patience is key. That's why I trade futures. Yeah. I will buy a very small amount of S&PS here. Why is it? Hold on. Let me look this up a little bit more. It's probably earnings, I'm assuming here, huh? Yeah, missed Q3 revenue. Non-GAAP earnings 339 below expected 380. Design IP segment declined 8%. Lowered its fiscal year guidance substantially. Export restrictions have disrupted business. Okay, yeah. I mean, I'm still okay with buying a very small amount here. It's gonna be a very small amount though. I don't really trust it like that. Like some of the other ones. We'll buy a very small position here. And yeah, see what happens. It's already rebounded back up though, so I'm not really the most optimistic here either, but small enough to where I don't have to worry too much about it. Nvidia. Was AI correct predicting the job numbers yesterday? I don't know. What did AI say? I don't think it was. What did AI say yesterday? Remember, I did it. Hold on, let me look. I have to scroll way back here. I remember AI did predict something before it dropped. I have to go back and find it though. I remember I got onto AI. I was like, no. Oh yeah, here it is. AI got it wrong, but it wasn't bad. All right, so here's what AI said prior to the benchmark revision last Friday. Or no, on Tuesday. So this is what ChatGPT told me. And this was prior to the revision. I said, summarize the benchmark revision. And it gave me numbers. It wasn't wrong, but the numbers were wrong. It says BLS job growth was much weaker than thought. Downward revision of 800,000 jobs. Average monthly gains now closer to 67 versus 150 expected. Confirms the software labor market feels fed, cut bets. Right, so it was right about the downward revisions, but the downward revisions were over 900,000, not 800,000. I don't know where it got 800K, but this was like hours before the actual announcement. So, you know, I don't know. Oh yeah, my apologies, Adam. Pawn's telling me he's messaging you, so my bad, dude. No, but Adam, that's great. That's great. Congrats. Yeah, AI said 800,000. You think Adobe will take on earnings today? I don't know. Maybe. You're gonna trade gold today? I don't know. I think I think you could argue maybe a dip buy into gold ahead of this inflation report, but I don't know if I'm confident enough in it to do it. I did okay yesterday doing it though. Like we made some money yesterday doing it. And so if I do it, maybe I'll do it on like a combine or something. You know what? Let's try it. Yeah, I mean, we just tried it on gold. See if this ends up working here on a combine. It's just a combine though. Oh. We bought it. Now we're up 12 ticks. CPI comes in as expected. Do you guys think we rally sell off? I really don't know. I think it's hard to tell right now. I think as expected might make us go up, but I'm really not 100% sure. You know, I'm gonna add a little bit to this. I think we got 5 micros in gold. I think we'll probably go up if we come in as expected, but I don't know for sure. It's all just speculation at this point in time, to be honest. Yeah. Wait, do we have the ECB rate decision? Oh, we do. So we got the ECB rate decision today as well, guys. So we got the ECB rate decision at 8:15. We got CPI at 8:30. Man, dude, apparently I can't drink coffee normally, apparently. This is not the first time. Ugh. All right, I'm okay. I'm here. I'm okay. But yeah, so around 8 o'clock, we're going to get some volatility. What's up, Faye? What's up, Adam? Expected move for a good reading was around 1.5% year over year. I don't think we're getting 1.5. I don't know. You would think lower would make the market go up, but sometimes it really is like a buy the rumor, sell the news event, right? So like sometimes we get like what is conventionally seen as a good CPI reading, and then the market reacts the opposite way. And so, yeah, we don't know for sure. Gold, I'm buying gold just because I tend to think it'll go up. I'm trying to make it a longer term trade, but sometimes a longer term trade for me is 5 minutes. So gold's down on the day. And so, and it's been dropping really since yesterday's inflation report. And so I'm going to buy gold leading into this one, but just in terms of extension, longer term extension. But it's a combine account. It doesn't matter too much. We're already up 1,000 in this account. And so, yeah, we're just going to see if we bounce back. Yeah, we'll all just trade when the trend goes anyway. We still got 40 minutes left until CPI inflation data, guys. 40 minutes. Nvidia back up to almost 180 again. Nvidia's getting close to all-time highs. What is it, like $5 away from all-time highs? So it's got a chance. And again, we got the ECB rate decision today. The ECB is expected, which is the European Central Bank. All right, this is the whole, like the Central Bank of Europe. It is expecting, is this right? It's expecting a pause? Yeah, so the ECB is expecting a pause today. So if CPI inflation goes high, would that push the Fed to move their rate cut to another month? It depends on how high. It could. Like a higher than expected reading today is going to potentially decrease odds of rate cuts next week, but I think we're too close to next week. We're less than a week away. I don't, even if we come in higher than expected, I still think we're going to cut 25 basis points just based off of the massive weakness we're seeing in labor. There's always a chance we don't. And I would say the higher inflation shows up as, the more likely it is to actually significantly influence those expectations for next week. But I still think we're going to cut rates next week 25 basis points. I think that's the most probable thing here. Bitcoin, if we take a look at it, we got Nvidia up, Bitcoin at 114, gold up. I'm in gold right now. We've just been dropping since yesterday after the PPI report for gold, so I figured it was probably a pretty good time to buy the dip. Yeah, Powell's coming in next week. We're gonna do a FOMC stream Wednesday. Stream it live as we always do. Cover everything. Watch the Q&A. Watch the Powell rate decision, which at this point is looking like 25 basis points. And but yeah, we'll see what happens. News is pretty light on the day, but again, heading into ECB decision is going to be in what, 30 minutes? No, less than 30 minutes now. I don't think that's going to move markets too much, but it is Europe, and so it's not a small report. Gold's pretty stagnant, though. It's not really moving here. You guys think we'll get a bullish or bearish day? We did a poll. What's up, Sam? Yeah, it would have to be a big, hot number to influence rate odds significantly, in my opinion. Unless it's low. Yeah, what can I say? I like my couches, you know. Yeah. Buy gold, 35.81. I already bought gold. It's up a little bit. Yeah. All right, guys. X is so political today, and again, rest in peace to Charlie. It's terribly sad. It really is, man. Anybody that celebrates this or even uses this as an opportune time to, like, you know, he's usually just a terrible person. So rest in peace. I'm not gonna go too deep into it. I see some people saying in chat. Again, very sad, very sad. But it's a little too political for me. But yeah, rest in peace. Again, PPI yesterday showed up at a negative number, and they also revised the previous hot report down. Should have been negative 0.1%, expected 0.3 yesterday, month over month for headline PPI. Core PPI month over month showed negative 0.1% as well, versus expected 0.3. Year over year headline showed 2.6 versus the expected 3.3. So PPI, all things considered, showed up at a pretty low number yesterday. A pretty low number. And this was kind of surprising a lot of people. So we've had a really hot PPI report and then a really low PPI report in the last 2 months. I'm curious what the next one's going to be. What I'm really curious is to see if any of those PPI high prices that they were revised down a little bit, but I'm curious to see if they got passed on to consumers in the CPI report. That's what I want to see. And yeah, 20 minutes. Top 3 couches in the world right now. All right, so gold looking pretty nice up here. I'm gonna liquidate a little bit just because it's been kind of back and forth here. All right, I'm just gonna sell it like this. All right. Yeah, that's how it goes sometimes, Pawn. Yeah. This is Bitcoin futures up here, so it's gonna be off from the spot price. Same thing with gold. Like this is gold futures, and so they're gonna be slightly different than what we're normally gonna see. I mean, AMD's low. AMD's been dropping from 180s down to 150s though most of the last month and a half. Long gold futures. Yeah, I mean that's what I bought gold right here, because if you zoom out on gold, and again, I'm not an investment professional here. I'm certainly not liable if you lose money. I might have no idea what I'm talking about half the time. I'm might be wildly wrong about anything and everything I say. Don't copy me. With that said, though, gold has been dropping down pretty significantly since yesterday's PPI report, and so that's why I bought gold. It tended to work, or it ended up working out so far. At least we've scaled out of some of the position, locked in some profits. Might get out of another little piece here. We can get filled. I'm gonna take one off here, and then I'll probably hold the rest break even. So we're not gonna lose money here. And then we're just gonna hold the rest break even. See if we climb up into the CPI report. We got 30 minutes left until CPI drops, so Bitcoin's not really moving much. It's pretty stagnant here for the last hour. Again, looking at our poll, 54% think CPI today shows up higher than expected. 46% thinks lower than expected. Oh man, I'm looking, my gold trade just turned downward here. We're still green, but again, I'm gonna hold it break even now. There's a chance we just chop leading into this report as well, just because it's inflation report, so ahead of this, a lot of people are just nervous. All right, we're back green here. Let's see if it holds now. Yeah, we got 30 minutes left. 30 minutes left. All right, look at this rip right back up here. So we didn't panic, and it ended up bouncing right back up. Look at that bounce. Wow. Wow. All right, we got 2 left. Look at gold bump up here. Trying to see if we see any news for this. Look at this move up. This might be 8 a.m. scrum with gold. We had Mexican industrial output, Brazilian retail sales show up as well. I don't know if that really moved things, but maybe. All right, guys. Yeah, we got almost 1,600 people here already. We still got 30 minutes left. I appreciate you guys choosing to watch it with me, man. We cover all this stuff as soon as it drops. Kroger just posted earnings. I'm still in gold. We posted a preview of the CPI report on our X page at Beginner Trades. OPEC keeps 2026 global economic growth forecast at 3.1%. And remember, we do have the ECB rate decision going live today in about 13 minutes or so for the ECB rate decision. They're expected to pause rates. I don't think it's going to have a big influence. Their statement matters too. We'll cover their statement when it drops. But yeah. Yeah, 30 minutes. Again, you can put it in 2x speed. You can hit the live button next to the play button to make sure you're fully caught up on stream. That way you'll get the data in real time. Again, put it in 2x. You'll catch up fast. Still in gold. Nasdaq's starting to rise here. Figure technology. Yeah, I mean, I'm watching the IPO. I don't really play IPOs though, guys. I've said this once, I'll say it again. IPOs are too volatile and risky here. They just are. I'm not really gonna mess with IPOs most of the time. They're just too freaking crazy and volatile and risky. Nasdaq still pushing up though. I mean, Nasdaq's almost back up to 24. Yesterday we tapped it. You know, we got up to 24.44 and we're at 23. We kind of dipped after CPI, which again, or PPI. PPI is kind of buy the rumor, sell the news, right? Low inflation data, people get baked into outcomes and we don't really get the outcome everybody expects. And sometimes we get squeezes in the opposing direction from these reports. Yeah. Yeah, open door, OPEN. Again, I'm just, it's not really my style, regardless of how much it goes up. 780s. They're losing money is the problem. And so that makes me hesitant to invest in them. Yeah, Bitcoin at 114s. I don't know what I want to do with this gold trade, man. I could add and then hold it break even at this point in time. I think that's what I'm going to do. There we go. Gold still rising. Heading into the CPI report, maybe the uncertainty of it will drive this higher. We're already down a lot since yesterday's PPI report. So if people get nervous about this report, maybe. Not an investment professional, don't copy me. Applied Digital. It's had a really good year, but it's up a lot. You know? Like percentage wise, it's up a lot. Yeah, the VIX is probably lower today, I'm assuming. Yeah, VIX is down to 15 if we take a look at the VIX. VIX is down to 15. Wait, did one of my headphones just go out? I think it did. I got too many pairs of AirPods is the problem. Oh well. All right, gold's still steady popping up. Bitcoin rising up to the top of the range. Nasdaq pushing up as well. Expectation is 0.3% month over month for both core and regular. I'm gonna start liquidating. No, 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 no. I don't want to get out the whole position. Okay, yeah, we're gonna start liquidating half of this back again. We're up hundreds on the trade, so that's good. Thesis was correct. We can hold the rest break even now. If it continues higher into CPI, there's a chance we chop leading into it. And again, we got 0.3% odds for both core and headline CPI today. 3.1% expectation for core CPI, 2.9% for headline CPI year over year. Let me know your predictions in chat right now. What percentages do you think we show up as today? Let me know. What do you guys think we show up as today for CPI inflation data? I've been trading gold more and it's been working, chat. Maybe I should trade gold more. Should I trade gold more? Let me know in chat right now. I'm going to cut this here, or at least most of it, and then we'll hold this last one break even. I'm going to set the stop at 57.2 here. All right, so we got our sell stop there, and we will get out flat on the rest. Basically, give it a little bit of room, but we'll get out flat on the rest. There's a lot of easy stories to predict in gold too, I think. On a 24-hour time frame, there's liquidation clusters. All right, so we just got stopped out on the rest, break even with just our little baby micro contract. Still up really nicely in that trade. I'll take it. Don't follow me a bit. I don't want anybody to copy me. I'm not an investment professional. While I might have made money on that trade, I might be wildly wrong about anything I do. As expected or higher? Yeah. Hey, we'll see. 20 minutes left, chat. We got 2,000 people here already. Ugh. I got a haircut, and now it feels almost colder out. I think I was warmer with my previous hair. It was time, though. It was time for a haircut. Too late, man. I already thought about it. Don't do it. Hello, love from India. Let's hope rate cuts are confirmed. Yeah, I'm out of my gold trades. I'm going to put up a NASDAQ here. NASDAQ pull it back a little bit. We got the 200 exponential down here. We got this 950 level. The market seems to react. And then we got the highs of the day up here at 956. We're going to watch this right here. Watch 24s up here. We got some levels above us, but 200 exponentials right around here. Bitcoin pushing up. I'll put gold up on the bottom right chart. VIX is lower today. Great clips, super clips, of course, you know. Super clips for the win. Now, I haven't been, my mom used to bring me, what did my mom used to bring me to? My mom used to bring me to Fantastic Sam's, you know. The GOAT, I guess. I think you'd enjoy trading silver. Silver looks very choppy, but it looks rangy. Yeah, I see Solana going, man. Look, here's Sol futures. Look at Sol right now. 229. Solana running. What's up, AV? Copper running as well. Yeah, guys, 20 minutes here. Yeah, silver looks a little choppy for me personally. I think gold, there's a lot of stories, and gold is influenced by macroeconomic events much more. And so it's easier to like make different stories about it and like tell different stories about it. What's up, X? Fantastic Sam's, huh? All right, chat. 18 minutes. 18 minutes. NASDAQ is elevated slightly on the day. It's not up too much. Again, ECB levels are going to drop in about 2.5 minutes. They're widely expected to pause rates where they're at. Inflation is near target, but somewhat fragile, they say, regarding the ECB's 2% target. Economic growth is sluggish. Many analysts think that rate cuts for the rest of the year for the ECB are less likely. And again, this drops in 2 minutes for the European Central Bank. And then after that, 15 minutes later, we got CPI Inflation report going live. Yeah. It's going to be important. Tariff effects in core goods. Analysts expect costs and goods category exposed to recent tariffs may drive noticeable increases. Shelter inflation trends are relevant. Rent and housing, basically, whether they continuing to rise or cooling off, which could help drag down core inflation potentially. Food and energy volatility in the headline number that we get. That's relevant. We want to see if there's signs of weakening services inflation. If service inflation, non-housing services slows, that suggests inflation could be less broad-based. And yeah, we're going to watch for all of it here. We're going to digest the report. We're going to cover it as soon as it drops. Again, numbers are dropping at 8:30 Eastern Standard Time. Core CPI and headline CPI month over month expected at 0.3% today. Core CPI year over year expected at 3.1%. Year over year headline 2.9% expected. We also have jobless claims today. I forgot. We got jobless claims unemployment today dropping as well. Expected at 235,000. This is a little bit lower than last time's pretty hot number at 237,000. But they are expecting them to decrease to 235K for initial claims today. So we'll look at that number as soon as it drops as well. We got 15 minutes left. You have almost every country in the world in your chat, John. Hey, thank you. I appreciate it. ETH trying to push up. A lot of people talking about ETH. I see Solana ripping up. ETH is ripping up too. 4480s. Nvidia back up to higher 170s. Yeah, relevant data today for sure. Again, 15 minutes. All right, guys. 15 minutes. We had the ACB rate decision today that just came out. They paused rates, I'm pretty sure. Let me make sure. Yeah, they paused rates. So the ECB paused rates. We can look at their decision here. It's not really moving markets, like I said. Let's see if it lets me pull this up. But yeah, ECB paused rates. ECB deposit rate at 2% versus expected 2%. Refinancing rate at 2.15% versus expected 2.15%. We can look at the statements here. The Governing Council today decided to keep 3 ECB interest rates unchanged. Inflation is currently around 2% medium-term target, and the Governing Council's assessment of inflation outlook is broadly unchanged. The ECB staff projections present a picture of inflation similar to that in June. Headline inflation averaging 2.1% in 2025, 1.7% in next year, and 1.9% in 2027. For inflation core, they expect an average of 2.4% this year, 1.9% next year, and 1.8% in 2027. The economy is projected to grow by 1.2% this year, revised up from the 0.9% expected in June, so a little bit better GDP growth for Europe. Growth projection for next year is now slightly lower at 1%, while the projection for 2027 is unchanged at 1.3%. So yeah, the ECB kept rates unchanged, paused rates, changed their growth expectations slightly better for this year, slightly worse for next year. But yeah, that's basically the ECB report. It's not really going to move much, I think. But yeah, they said rates left unchanged as expected. I'll put this number up in chat. Love from Wales. Watched your channel for about a year. Never stop. You're the only guy that gets me ready for the news and understanding what to expect from the results. Hey, thanks so much, man. I appreciate it. Wales. Here's a question. I know Wales is part of the United Kingdom, but I've been watching the show Ted Lasso. Is Wales a different country? I always assumed Wales was part of Britain. You know, let me Google this. Yeah, Wales is apparently an independent country. Independent sovereign state. But a constitution country of the UK. So kind of. Yeah, no, listen, I don't have any geographic sense. Top 3 worst geographers in the world right now. My last name's London. My actual last name is London, so I think I should know this. I should have known this. But honestly, I kind of did already. Like, I kind of knew Wales was not a country already because I heard it on Ted Lasso. But I just kind of wanted to, you know, make you guys comment a little bit more. That's the argument I'm going with, at least, right now. All right, guys. Nasdaq's flat. We got 12 minutes left. 12 minutes. Yeah, no. I'm just messing with you guys. Kind of. Yeah, my last name is literally London. Top 3 most British last names ever. I always wanted to go to England and like buy something that they needed my ID for and then hand them my ID and be like, haha, you know. All right, guys, United Health is pushing up. United Health's been moving up big. Honestly, I sold it at like, I don't know what I sold it at, like 310s. Yeah, no, I know. I know Scotland, Ireland, Wales. They're in the United Kingdom, but they're all their one country. I watched this documentary on the Irish, the 80s. I don't want to be too specific because it's kind of like it was honestly a terrible conflict. But yeah, it was horrible. Anyways, we got 10 minutes left. 10 minutes left. Yeah, my son's name is Jack. Jack. Last name London. Top 3 authors in the world right now. Listen, guys, we got 9 minutes. I'm going to start pivoting the focus to CPI inflation data. CPI expected at 0.3%. Core expected at 0.3% as well. Core on the year is expected at 2.9%. Or no, core on the year is expected at 3.1%. Regular CPI expected at 2.9%. I know about Northern Ireland. I just watched the documentary, you know, like a few days ago. Terrible. Honestly, it made me feel bad. The whole documentary was just sad. ECB interest rates unchanged. Yeah, they paused rates as expected. They're probably not going to cut for the rest of this year. Gold's still spiking up. I should have held my gold position. If we take a look at gold. Okay, guys, we got 8 minutes left. 8 minutes. Negative CPI means we go down. I don't know. I think negative CPI while it's good for rate cuts, and it might increase the odds of a 50 basis point cut, what negative CPI might show, which is I think is what happened yesterday, is that too weak of CPI can mean a struggling labor market and economy, right? And so if we have too weak of a number, it's all very fragile, and people who interpret this data, you know, they're very fickle. Like, they want the perfect number. It's kind of the Goldilocks complex. They want the perfect number here. And if we don't get the perfect number, they might still react negatively. And so I think if it's too negative, it might actually mean a bad thing. Traders might interpret that as too negative of a sign of a weakening economy, if that makes sense, right? But I don't know. Let me know what you guys think. If we get a negative CPI print, what's going to happen? I usually try to predict CPI. I don't know if I'm going to try to do it today. I can try to give out a prediction. Year over year, I'm going to go with 2.7%. I'm going to go with 2.7%. 2.7, 2.8% is what I'm going at. Slightly lower, but as expected. We could also see the very different number, and this is just a straight up guess. If the producer prices we saw last time that were hot and elevated, if they show up into consumers, it might make CPI elevated as well. We don't know. But again, I'm going to go with 2.7 to 2.8% year over year. Hey, buddy. Love you, man. Jack London right here. Hey, Jack, come here. Dude. 2.9% or 3%? I don't know, maybe. Let me hear your predictions in chat. 54% think we're going to come in higher than expected. What, buddy? Yeah, gold flying up. I should have held my long position in that. NASDAQ down at 942s. Yeah, he's in a bad mood today. I don't know why. Gold is ripping up. Listen, we got 5 minutes left. Yeah, and all my people are mad about whales, okay? If I asked you to show up, point to Idaho on the United States map, would you be able to? Be honest. You know. All right, guys, we got 4 minutes left. ECB rate left unchanged. Yeah, pause. I mean, what you learn here is that 30 minutes before the rate decision, usually the rate decision is predictable. Yeah, Jack learned jiu-jitsu. Jack trains. He's good at arm bars. Good at top pressure. Yeah, he's good. I gotta troll you guys a little bit. I'm sorry. You know. Helps the algorithm, makes people comment more. We got 4 minutes left. 4 minutes left. Look at the NASDAQ fall down ahead of this report, chat. Listen, we got 4 minutes. Put it in 2x speed. Hit the live button next to the play button. Make sure you're fully caught up to the stream. Can you train with a bad knee? I'll answer this after CPI. Depends on how bad the knee is, though. All right, guys, we are ready here. Oh no, what have I done? Hold on, let me exit out of this. All right, guys, CPI inflation data, 3.5 minutes left, a little bit less than that, actually. Okay. We're ready. Again, remember, we got jobless claims expected at 235,000 again, dropping at the same time. Gold is ripping up. Why? Probably we have the EU commissioner saying we need to import more American LNG. Could be influencing it. It's probably just reacting to potential volatility that we're getting from the CPI report today in 2.5 minutes. Buy or sell right now. We got 4,000 people here. 2.5 minutes left. The EU commissioner says we need to import. Yeah. Ooh. All right, guys. Yeah, previously CPI month over month showed up at 0.2%. CPI year over year is expected at 2.9%. Previous of 2.7%. 0.3% expected for core. Again, previously core showed up at 0.3%. Core CPI year over year showed expected at 2.9%. Or no, core CPI year over year expected at 3.1%. It previously showed up at what? All right, guys, we got a minute left. 2.7 or no. Core showed up last time year over year at 3.1. All right, guys, here we go. We got about a minute left. Again, hit the live button next to the play button. Put it in 2x speed. You can vote in the poll. We got almost 3,000 votes. 54% think we're going to show up higher than expected. 46% think lower than expected in the poll. The timer's a little bit early, actually, so we actually have about 45 seconds left. Gold has been spiking up over the last 5 to 10 minutes. Nvidia is elevated on the day. The NASDAQ is technically green, but it's mostly flat over the last 10 minutes. Again, CPI expected at 0.3% month over month for both core and regular. 30 seconds left. Remember, put it in 2x speed. Hit the live button next to the play button. Put it in 2x speed to be caught up on stream. Hit the live button next to the play button. Again, put it in 2x speed. We got 15 seconds left. You'll be caught up if you do. 10 seconds. We got over 5,000 here. Let's see what the report shows. Here we go. It's time. 5 seconds. 3 seconds. And here's the report. 0.3% as expected for core, 2.9% year over year for regular, 0.4% on the month for CPI month over month. Again, 0.4% month over month for regular CPI, year over year, 2.9% as expected. Everything was as expected except core month over month. Jobless claims ended up showing at 263, way higher than expected. 263 for jobless claims, way higher than expected. Again, way higher than expected. Again, CPI month over month showed up at 0.4% versus 0.3% expected. Year over year showed up at 0.3% versus expected, or showed up at 2.9 versus expected 2.9%. Month over month showed 0.3% versus expected 0.3%. And year over year core showed up at 3.1 versus 3.1%. So everything basically showed up as expected. Except for month over month headline, which is 0.4%. Yeah, so jobless claims is the scary number here. NASDAQ's mostly reacting positively to a flat CPI inflation report, but jobless claims did show up way higher than expected at 263. This is the scary number right here, I think, chat. Yeah, again, as expected everywhere except for month over month headline CPI, which showed up at 0.4% versus 0.3%. Core CPI 0.3%. We can take a look deeper into the actual CPI data. We can take a look at the actual CPI data by the BLS here. And so again, in August, The index for shelter rose 0.4%, was the largest factor in all monthly increases. The food index increased 0.5% over the month as the food index rose 0.6%, and food away from home index increased 0.3%. The index for energy rose 0.7% in August as the index for gas increased 1.9%. Index for all items less food and energy rose 3.3%. All items rose 2.9%. So yeah, headline. But yeah. Shelter 0.4% increase here. Yeah, the scary number might be 263,000 today. Yeah, so this is basically as expected report. What this does though is this essentially confirms, I think, a 25 basis point cut next month. Look at the NASDAQ turn. Maybe gold spiking up, NASDAQ turning down here. Gold spiking up, NASDAQ turning down. Let's see if it holds. But yeah, this is as expected numbers. If you want to see what rate odds are going to do, look at yields. Okay, so yields are currently at 4% as of now, at 4% here. So basically they're dropping down. Yields are at 4% right now. Look at yields drop. And if we take a look at like the CME watch, so I'm sure it hasn't changed yet. It might take another 5 minutes to change or so. But I'm sure we're going to see even more confirmed odds of rate cuts after this report. Look, here's CPI, or here's the reports here. So 92.8% still, but it might change. NASDAQ's starting to turn down. Again, I think the scary report is the jobless claims number showing up wildly over the expected number. I think that's what scared people, to be honest, because the jobless claims numbers was 263 versus 235 expected. So that's a wild number. That's way higher than expected. That's literally 30,000 almost jobs. 30,000 more people filing for unemployment than expected week to week. That's a big increase week to week. Yeah, I'll put these numbers up on screen. But yeah, 2.9%, 0.3 or 0.4% on the month. Yeah, I'll put these numbers up on screen now, but again, all else as expected for CPI. NASDAQ's falling down here. Yeah, so we're showing weak labor. I mean, I don't know if it's stagflation. Today's inflation report was slightly elevated and the jobs report was weak, so I guess that could show stagflation. Is it by the dip? I don't know, man. I think what this does is confirm rate cuts next month with weak labor and mostly as expected inflation. What we're seeing now, though, is yields are actually going back up a little bit. They're still down from this report, but yields bounced back up. They were at 4% even, and so we'll see what happens here. Data came out very high. It was mostly as expected everywhere, except for month-over-month headline. Core was flat. Year-over-year was flat for core and regular headline. Only thing that was higher than expected was month-over-month. Again, I think the bad data today was the jobless claims numbers. 263 versus 235 expected. That's a big miss for jobless claims. Much higher than expected. Jobless claims is how many people are filing for unemployment. So that's high. That's high. Again, CPI rolling, scrolling at the bottom of the screen. Hit the live button next to the play button if you're delayed. We covered it right at 8:30. It literally as soon as it dropped. Again, the scary number was jobless claims, 263 versus 235. CPI was mostly flat. The only one that was outside of the the only one that deviated from expectations was month-over-month headline, which was 0.1% higher at 0.4% versus 0.3%. Yeah, we're higher than last month. Yes, for a headline, correct. We're the same as we were last month for core, which shows that food and energy prices drove potential higher. Shelter prices rose as well. Economy's definitely getting worse for sure. We're showing weakening in the labor market. You know, we see signs of this everywhere. We see signs of this in payrolls. We see signs of this in jobless claims, unemployment filings. We see signs of this in unemployment rate. And so, yeah, we're seeing a weakening economy for sure. I mean, the data is not really arguable at this point whether the economy is weakening. And again, that's why I think this data, even if it's as expected, is going to all but confirm rate cuts next week. Now, I don't think we're going to do 50. I think we're going to start at 25, but maybe see if this changed. So yeah, this is still pretty much 91.8 versus 8.2%. Gold's ripping up. Yeah, this confirms a rate cut is what this does, I think, right? So this is all but going to confirm it. I don't think there's any chance we don't do a rate cut now. I think that would be wild if we didn't. You know. So, yeah. Basically confirms rate cuts. If you want to look at rates, you can put up like TNX, 10-year Treasury. You can see like from this report, we are down. Leading into this report, we're down, but from this report, we are down as well. Gold spiking up. Yeah. Cut for the wrong reasons. What's wrong about cutting right now, I think? You think massive turns and weakening in the labor market is the wrong reason to cut? I think that's actually the right reason. Cuts need to be proactive. And so, you know, I think we should cut. I think it's time to cut. I think we probably should have cut last month, realistically. I've been saying basically the same thing. I've been saying for months you could argue a rate cut last month. And now I think we're getting confirmation in that. We're seeing the data show up negative for labor. You know, we had one hot PPI report, but then they revised those numbers down a little bit yesterday, and so that's good too. That opens the door for more interest rate cut sentiment. How many rate cuts do you think we'll get by the end of the year? I'm looking at the rate odds here. They're not really changing, and I don't really expect them to. We're not really getting super hot numbers here, right? We're not getting super outside of expectations. Everything was basically flat and as expected here. And so, you know, yeah. Oh yeah, markets is a bad rate cut. Correct. Yes, that actually is true. Sorry. So markets might interpret this as negative because they're going to see it as the economy's weakening, and that might make them more pessimistic regarding like the future of things. You know, but still, yeah. No, you're correct. The reaction that we get depends on why they think we're cutting rates. If we're cutting rates for, you know, doom, essentially, then yeah, markets might not like it. They might fear, you know, what this means. You know, they might fear basically panic. Like they might fear what rate cuts mean. At the same time, though, I think this reaction is relatively small for CPI. I think this reaction is relatively small based off of, you know, I usually cover all this stuff. This is a pretty small reaction. Higher jobless claims is great for stocks and lower interest rates. Yes. I don't know if I would say it's great for stocks. Higher jobless claims means more people are filing for unemployment week to week, right? And so it's more of a negative look at unemployment the higher jobless claims are. More of a negative look at employment the higher jobless claims are. So the more weak the labor in the economy is, the higher jobless claims are. Now, whether that's good for stocks depends on the context of things, but yeah, I mean, it means a weaker labor and economy market, you know. The jobs is what might affect the market. Yeah. With AI coming out, that was expected to happen moving forward. Maybe. Yeah, I think AI is going to replace jobs. It's going to create jobs, but I think the net effect of AI is going to be less jobs in the end anyway. And I think that's probably, I mean, I think that should be pretty obvious to everybody. But I mean, it's going to create jobs as well. It's going to create industries. It's going to create businesses. So. Yeah, the rate odds. Again, yeah, so the odds of a 25 basis point cut just went up dramatically. And I think this all but confirms a 25 basis point cut. You never know. But odds of a 25 basis point cut now 5.6%. 5.6%. This decreased here. The only way the rate cut 50 basis point odds would increase is if we had really, really low inflation. Right? Really low inflation would increase the odds of a 50 cut. And that's not really what we saw. We saw slightly higher, but as expected, is what the data showed up as. Slightly higher, but as expected. And this is all but confirming 95 to 5% odds now of a 25 basis point cut here. Well, no, I already said my take on robotics here, guys, is that I've said it once, I'll say it again. I think AI is going to fundamentally change the world. And if we're not careful, it's going to change the world in a negative way. I think that what's going to happen eventually, if you try to okay, if you look at where AI is today versus where AI was 3 years ago, and then you extrapolate that growth over the next 20 years, I think it's pretty plausible, or I think it's pretty probable, I should say, that within 20 years, we're going to have humanoid robots that can do a lot of the things we do, which might replace jobs, as well as are going to look virtually identical to us. When that happens, I think it might actually cause the population to go down a little bit, because people are going to sit at home with their robots. They're not going to go out and meet people. And that is a scary pattern, I think, overall. And I think that's the risk of it as well. You know, people already use dolls and all kind of weird stuff now. And I think once you have humanoid robots that talk to you and have conversations with you, that dynamic is going to get noticeably worse. And I think that's pretty obvious, too. Robots cannot replace it. See? I think they can, actually. You're underestimating the ingenuity and the creativity humans have for creating things like that, I think. Some people date ChatGPT. Now, imagine if ChatGPT was an actual robot. What they're going to do, it's obvious. We have robotics right now. We have AI. The next step is going to be implanting AI into those robots. And that's the next step. It's very clearly the next step. That's going to be the next big money push, I think, as well. NASDAQ started to bounce back up. We are over 23.9s here. We are over 23.9s. NVIDIA at 178.50s. Yeah, I could be a robot right now and you wouldn't know it. You know? Do you think people can make a living of trading? Sure they can. It's difficult. It takes a lot of variance. I don't think everybody can. I think it takes a specific personality. With a name like John London, he's definitely a robot, definitely. Top 3 most robot-like people in the world right now, for sure. Yeah, top 3. All right, hold on one second, guys. All right, sorry, I had to call my kids. My son boycotted me today. He got games taken away yesterday, and now he's pouting about it this morning. I know, I was on the phone. I'm on the phone, guys. I gotta do robot things today, you know? I got robot responsibilities here, okay? I can't just talk to you guys all day. We got 12 minutes left. NASDAQ rejecting at 950s here. 950. Johnson, the Maldives. Inflation was as expected mostly. The bad number, again, was jobless claims unemployment, which came in way higher than expected at 263 versus 235 expected. Yeah, way higher than expected. Shockingly high. Again, give me a follow on x.com at beginner trades, BEGINNERTRADES, at beginner trades. Give me a follow. I appreciate it. We cover all the stuff live as soon as it drops, as well as right here. You can watch it all right here too. People are saying jobless claims coincided with Labor Day. Man, that might be true. Six-month annualized CPI rate was 2.3%. Yeah, so again, now it's pretty expected that we're going to cut rates 25 basis points. Thanks, man. You're one of the smartest I've watched in YouTube. Just don't tell the country of Wales that, okay? You know, no, it's all love. To my UK brothers and sisters. My last name's London, London, you know. Of course. You know. They release jobless claims and inflation. Yeah, today's Thursday. Every Thursday they release jobless claims, unemployment filings. And so today the number showed up at 263,000. They expected 235,000. So that's almost 30,000 more than expected. That's a big number. That's the number of people filing for unemployment week to week. I like the Welsh though. They seem like smart people, you know. Yeah, buyers still stepping up. We're almost at 950. Clearly bullish. I don't know. I think it's somewhere in the middle. It's as expected. CPI was as expected today. It's flat. And so we're not really moving. Like I said, even after this drop, we're not really moving up or down in any significant way today. So far, at least. Not the reactions so far. The reactions have been somewhat muted. I think this is just pricing in a 25 basis point cut next Wednesday. CPI data is already out. It might be scrolling in big yellow letters at the bottom of the screen, sir. Hit the live button next to the play button if you're delayed. I appreciate it. Let's end this poll and let's ask another poll. Are you bullish or bearish on today's? Also, guys, check out Top Step if you haven't already. There's no PDT in futures. You can day trade the S&P, NASDAQ, Dow, Russell, Gold. Get you around the PDT rule. You get started for $50 a month. If you pass the test, you get a $50K funded account, 90% split. You get to keep your first $10K prior to that split kicking in as well. So it's similar to funding your own account. But most day traders, when they fund their own account, they lose thousands and thousands of dollars. And so it makes no sense to fund your own account thousands of dollars in the beginning because you're probably going to lose. $50 on Top Step, you pass it, 90% split, your first 10K. Very similar to funding your own account. If you fail, you lose $50. The best of both worlds, right? They pay out millions, fund thousands. They now have their back to funded option, which lets you reset funded accounts as well. And yeah, it's just a great way to learn. They're a sponsor of mine. I get paid by them. I am biased in their favor. Some would say I'm the top 3 most biased. Understand all this stuff on screen. I can't guarantee any of it. I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment. Trade smart. I can't guarantee anything. But if you want to check it out, I'll put the link up, and I'll pin it to the top of the chat. I'm green today. I've been mostly day trading gold. Somebody's telling me to check the Fed watch tool now to see if these odds are changing. Yeah, the odds of a 50 basis point cut are now up to almost 12% here. Almost 12% odds, probably from the jobless claims number here, right? The jobless claims number was bad. 30,000 higher than expected. Not good. Yeah. 30,000 worse than expected, just not good. Let's do another poll here, guys. Are you bullish or bearish on today's economic data? Are you bullish or bearish for the rest of the day is what I'll say. Go to the poll. You know what you guys think. Nasdaq's reacting positively to this. Again, I think maybe they want rate cuts. But yeah, again, like I said, I thought we should cut rates last month as well. I thought if we didn't cut rates, we could also end QT if you want to balance it. If we do a pause and then we end quantitative tightening. Like, you got to understand, quantitative tightening is a restrictive monetary policy where the Fed lets its bond holdings and MBSs like expire and mature is what it's actually called, and run off their balance sheet. It's called passive QT. Direct QT would be if they just started selling these things like directly on open markets. But what they're doing right now is called passive QT, but they're still doing QT, which is a restrictive monetary policy, restricting, liquidity, pushing the economy down and labor markets down a little bit, right? And so I think it would have been fair last month to end quantitative tightening. If you want mortgage rates to go down, end it on MBSs. But we didn't. And instead, last meeting, Powell paused and he came out really hawkish and he essentially said, we're lucky he doesn't raise rates. And so with all of that said, since Powell said that, we've seen a lot of really weak signs in the labor market. We've seen one downward revision last month where they revised jobs down 258,000. Last Friday, we had another payroll report and unemployment report where they revised jobs down again. And then we had the benchmark revision the day before yesterday where they revised jobs down, the largest number in history up to March 2025 of this year, by 900 plus thousand. And so we've seen a lot of weakening in the labor market, and that is not even including today's jobless claims report that showed 263,000 jobless claims, unemployment filings, week to week, versus 235 expected. And so we are seeing weakening in the labor market. Again, we're not in a recession. People are going to yell we're in a recession. We're not in one yet, but we could be heading towards one now. And I think a lot of people, you might hear the word stagflation a lot. Stagflation is a state of economics in which we have high inflation and weak labor. It can sometimes precede a recession. And so that's on the table now too. And that's something you got to watch for. And again, I think you could probably argue 50, but I don't think we're going to do 50. But you could probably argue it. It depends on what they're planning to do. If they're planning on doing consecutive cuts meeting to meeting, that's okay if we don't do 50. But if they're going to skip a meeting, which they sometimes do, sometimes they do a rate cut, skip a meeting, do a rate cut. And so if they do that, I think you could argue 50. Some people were arguing yesterday we should just rip a band-aid off and do 100 basis points. That's too imbalanced. I don't think they're going to do that. That would be a full percentage point cut in one meeting. But we also get an updated dot plot next Wednesday as well, which is going to tell you guys some stuff too. And again, we'll see. But yeah, I've checked Fed Watch, so it's pivoting back and forth. It's still basically 90-10. It's 89-11 right now. So the Fed Watch tool is basically 90-10. If we look at October, it's still pretty probable by October. So what they're pricing in right now, if you look at this here, what they're pricing in right now for October is they're pricing in a 25 basis point cut next Wednesday, and then another 25 basis point cut in October, making it 50 by October. And that's what they're pricing in right now. That's what markets are pricing in. If you look at yields, I'm sure yields are going to be down now. I haven't looked at them in a couple minutes, but I'm sure yields are going to be down. Yeah, yields are all the way down here. 4.03% for 10-year. They are reacting negatively to this report. But we'll see. We'll see. They were down at 4% for a little while right after the CPI report. CPI higher, non-farm payroll lower. Yes, that's stagflation. That's an economic state that can sometimes precede a recession. High inflation, weak labor, low payrolls, you know. All right, we did a poll. 62% are bullish on this report. 38% are bearish. Interesting. Yeah, there's an activation fee, AK. You know. Yeah, looking at the SPY, the SPY's been breaking all-time highs. Again, we're kind of flat right in the middle, though, today since the CPI report. Again, you can kind of see the CPI report came out here, and we are right here. So we dropped, we rebounded, and now we're kind of somewhere in the middle here relative to when the CPI report came out for the NASDAQ. United Health still pushing. Gold ended up spiking, then dipping down. So gold's kind of the same way, just the opposite. Gold ended up ripping up, and now it kind of pulled back a little bit, and now we're kind of somewhere in the middle here for gold as well. Thank you, Rusty, for the donation. Yeah, hit the like button, hit the subscribe button. We appreciate it. Yeah, will we get a opening bell reaction here? We got 30 minutes into the open. It's possible. Should be 25. Wait for the next CPI before the cut. Yeah, maybe. All right, we're up to 961s, 962s here. Super bullish for the Mag 7. I don't know if you'd call it that. I think it's somewhere in the middle, man. You know, numbers were mostly as expected. Inflation showed slight elevation month to month, right? So most of the inflation numbers were higher than, or most of the inflation numbers were flat versus expectations. Some of them were higher than the previous month, and the month-over-month reading was slightly higher by 0.1%. And so whether markets are going to interpret that as bullish or bearish, I don't think we're going to cut 50 next week. I don't think that's likely. It's possible, but I don't think it's likely. And yeah, we're somewhere in the middle now, I think, with this data. I think what this data is going to do, though, is confirm a 25 cut next week. I think it's going to make that the most probable outcome as of now. We don't really have any data that might change these results. And so, yeah. Tomorrow we have Michigan Consumer Sentiment Report, so we'll see what that looks like. But yeah, we don't really have any data that's going to widely sway these results, I think, at this point in time. Lagarde is speaking. She said the stronger euro could bring inflation down more than expected. Outlook for inflation is more uncertain than usual. Lagarde says headwinds on growth should fade next year, essential to follow up on recommendations. Indicators of underlying inflation consistent with 2% target. Forward-looking indicators suggest wage growth will moderate further. Core inflation a drop on declining labor costs, according to Lagarde. Risks to economic growth are more balanced. Market is going to rip up. Where's Bitcoin at? Gold is starting to pop back up here. Bitcoin at 114s, 114. So Bitcoin kind of not moved much from it, down a little bit, probably because Bitcoin wants, and crypto wants easing. And so with slightly higher inflation, Bitcoin probably is going to drop down. Yields are essentially flat on the day here. I see you, Sam. Stagflation is here. Yeah, I think a lot of people are going to say that. Surprise 50 to 100 basis point cut would cause volatility. Yeah, but that ain't happening. 50's got a better chance than 100. 100, there's no chance that happens. You know. If I was Powell, I'd choose to raise rates. Why? What's your argument for raising rates with, you know, so much revised jobs downward, weak labor? You know, why should we raise rates? I don't think that makes sense. I think it's set up for a 0.5% cut perfectly. You've got inflation under control as expected and terrible job numbers. Yeah, but I think a lot of people are going to argue that 3% inflation is not necessarily under control, you know. And I think when it's not just that, you got to consider Powell's previous comments. You know, a 50 basis point cut would imply that Powell was wrong. And so I don't think they're going to do that. I think, you know, 25 basis point cut is the most probable thing just based off of, you know, previous sentiment. Define now, Freddie. Do you think lowering rates now will actually help employment now? Well, no, there's a lag, of course. There's a big lag with rates. So. Are you guys bull or bear? Again, let me know. 63% are bullish on this report. 37% are bearish. All right, NASDAQ coming back down. We're out now under 950s here. We got 23 minutes left. Hey, appreciate the love today, man. We got over 20,000 views already for this stream. That's a fun number, man. I appreciate it. Thanks so much. Apple. Apple up to 228s. All right, we're down to 23,945s, heading towards that 200 exponential in a short-term chart. Yields are actually up a little bit. Gold is bouncing back some here. I don't see any other breaking news, to be honest. It's kind of quiet as of now, but we got 23 minutes of the opening bell. Let's see what that looks like. Yeah, so August CPI rise 2.9%. As expected, CPI is 3.1%. The CPI inflation is now at its highest level since January of this year. So 25 basis point cut on the table. Markets price in, what, 75 basis points, which is 0.75% by the end of this year. Next week will be fun. Again, we're going to stream the whole FOMC. Live. Subscribe, hit the notification bell. Subscriber growth has seen a bump up too, man. Appreciate the love. Yeah, I'm waiting for the arguments. Have you seen the rest of YouTube trying to copy your show? Yeah, I mean, I'm not really worried about them, man. You know, like, I've been covering this stuff for years and years and years, and I think when people listen to how I report it, they understand. Some of these other guys are just kind of jumping on a bandwagon, and that's fine. They do what they do. But yeah. If you're still talking about the Welsh, Tiago, you're probably a little delayed on the stream. Hit the live button next to the play button. Yeah, SPY is close to all-time highs here. We could break it. Same thing. I mean, obviously, the SPY is the S&P 500 ETF. Yeah, appreciate it. Yields are starting to fall back down a little bit. I see 4.02% right now. 4.02% for yields. There's an argument for rate hikes that would involve a departure from inflationary fiscal policy. Much short-term pain for a dollar that retains spending power. Never happened, but probably should. Yeah, I mean, look, I get it. Okay. One of the things that I have to make clear here is that the public's generally never quite happy with anything. You know, people get mad at all the stuff that happened in 2020, but I think if the Federal Reserve did not cut rates and stimulate the economy as well as do quantitative easing, we'd be in a much more dire situation than we are now or we would have entered a much deeper recession, I should say, relative to what we ended up doing. It still wasn't good, but you know, it still wasn't good, but it is probably less drastic of a recession and depression, you know, than we saw because of the stimulation that we did to the economy during that period of time. If we look at like a 10-year graph here, right, 2020 happened here, and the Fed brought rates down to almost zero. They printed money, which is quantitative easing. They created online bank reserves, and then they use that to buy up bonds and MBSs, and it injects liquidity into those markets, helps bring interest rates down. It's a dovish economic policy. They do it during desperate times, though. So they do quantitative easing during more desperate times. And so, again, you can see another time they did it was here in 2008. They brought rates to almost zero. They injected liquidity with QE and money printing. This causes inflation more than almost anything else, right? It's the inflation that we get from money printing in the Fed, the quantitative easing that we see. Now, again, I still think there's probably an argument for it. A lot of people don't like it, but they don't like it because it spikes inflation. And so basic rate cuts are not really going to spike inflation in a huge way. They could obviously spike inflation, but it's not going to be as bad as QE induced inflation. You know, and again, 2020 happened, and some of the reasons we got such big inflation, like, look, here's 2020 here. If you take a look at CPI inflation, and you take a look at the graph behind it, right? By the time 2022 hit, because of all that stimulus, and it wasn't just from stimulus, it was supply chain, it was stimulus checks, they sent out free money to people, right? They did QE, they did all these different things that made inflation spike. And so again, by 2022, CPI inflation, y'all think 3% is high, it was 9.1%. in 2022, 9.1%. And so then the Fed pivots to a hawkish monetary policy, which you can see here. They raise the federal funds rate aggressively. If you look at the federal funds rate during this period of time, Here's the rate hikes from it. By January of 2022, they start raising rates. I think they raised like hundreds and hundreds of basis points here, and then they paused them for a year straight. They didn't start cutting rates back down until late last year. Right around the same time last year is when they started cutting rates again, and then they paused them up until probably this month, where we're going to see the federal funds rate go down again. And so I guess the overarching point I'm trying to make is, like, it depends on what you fear more, a recession or inflation, you know. But again, basic rate cuts, as long as we don't print, the risks are lower if we don't print. If we do print, which again, Bitcoin and crypto people are pushing for QE, I don't think there's any reason we should do QE, but maybe we got an argument for one. It depends on, like, it depends on how quickly we start to see these signs of a turning economy and GDP and unemployment. I still don't think we should print. I think most people are unhappy because of this right here in 2022, because prices don't go down, they slow down. If they were going down, they would be under this line right here, which is the zero number, right? So if prices were literally going down, they would be here. But instead, the best we can hope for is a slowdown to the increases in price. And that's kind of where we're at now. We're now here. And so, you know, it's nuanced, I guess is what I'm trying to say. And I don't think there's really a right or wrong here. I think it depends on what you fear more. If you fear inflation more, sure, you can maybe argue, hey, even if we go into a mini recession, or recession in general, maybe it's justified because it'll give us a couple years of price stability and we'll come back down to earth a little bit in terms of prices. And I think the reason a lot of people are unhappy now is because of the price rises that we saw from 2022. You hear a lot of people that are like, oh, how can you say we're not in a recession? And then they reference inflation, which is the opposite. And so again, it's nuanced. I think you could probably argue a cut. I think ideally rate cuts are supposed to be proactive. And I think right now they're reactive, unfortunately, to labor data. And we'll see what happens. We'll see what happens. You know, yeah. Lower interest rates will, yeah, it'll probably raise prices, house prices up. You know, but it's more nuanced than that, to be honest. But probably, I mean, lower interest rates in theory would make people buy more houses, and buying more houses would boost the price of homes. Potentially. It's never as easy as, it's never a certainty, but it's historically, history doesn't repeat itself, but it rhymes. I think Mark Twain said it. And so, yeah, it'll probably make house prices go up. Sir, this is retail YouTube. We don't do nuance. Give us a 3% cut, 300 basis points. Yeah, maybe. I don't know. Again, I'm just here to report the facts behind things. You're welcome, guys. You're welcome. Make it 5. Crypto brain rot. Yeah. Yeah, the only time prices literally go down is during recessions, right? And this is what I show people often. Here's 2008 right here. That's the only time prices literally go down. Maybe a little bit of decrease here. But yeah. They don't stay that way anyway. But maybe a lot of people argue we need something like this to stabilize price. I don't know. Here, let's do it. I'm gonna do another poll here. We asked people bull or bear. Let's do another poll. The poll is gonna be: do you fear inflation? Which do you fear more here? All right. We got a poll going live. Which do you fear more, inflation or a recession? Vote. Let me know. We'll see where everybody stands here. Yeah, I mean, I'm a little bit more selfish in that way, though. I think anybody, like, I'm self-employed, and so I fear inflation. I don't want to see prices go up anymore. Recession's not really going to affect me too much, to be honest. I'm still going to work, but again, I know that's not everybody. And again, I think you can probably argue 25 basis point cut last meeting, especially this meeting. I think if we don't cut this meeting, market's going to be in shambles and panic. But I don't think they would do that, but it, you know, you never freaking know. Yeah, both would make, everybody would choose both because everybody fears inflation. I should have, I forgot one key more, or no, I actually included it. Which do you fear more? Okay. We're so 50-50 split on this right now. We got 120 votes. We're exactly 50-50 right now. Recession, Nick. Yeah, vote in the poll. We're honestly still 50-50 split. We got 9 minutes left until the open. See what the opening bell brings. Hey, do me a favor, hit the subscribe button, hit the notification bell. Help me hit 166,000. From a coder to coder, do you want to delve into some projects? Give me a couple months, man, maybe. I don't know. Not right now. My life's too busy right now for more projects. I'm gonna take a picture of this poll. This poll might prove stagflation is here, guys. You know? Recession means you lose your job. Yeah, I mean, neither one of them are good. Again, if you fear inflation more, again, don't get it twisted. Modern people are unhappy now because of inflation mostly. At least up to maybe the last year. Maybe the last year has pivoted more towards labor. But people have been unhappy for 5 years because of the inflation we saw from the 2020s. And so people underestimate the effects that inflation has on everybody. But I at the same time, I think we should have cut rates last meeting. And again, I'm going to give you an example of this, right? If you do not hedge your money with inflation, I do this once a week at least, but I'll do it again just because, you know. Let's say we get an average inflation rate of 3%, which is what we're currently at right now. And let's say you got 400,000 saved for retirement. If you do not invest this money, this 400K, over a 20-year period, you're going to lose a lot of that to inflation. It's going to be about 181,000 in buying power today in 20 years. About 180,000. I might have skipped a couple clicks or something like that. But again, if you do not hedge against something, gold, S&P 500, NASDAQ, bonds, real estate, rental properties, something, you're going to lose your money to inflation. That's why you got all these people that sit on cash. They're afraid to enter markets and they just let their money dwindle down. They never spend it. They lose it over time to inflation. And so it's environmental, it's situational, I should say, in terms of what you should fear more, recession or depression. And yeah, I don't think there's a wrong answer necessarily. T-bills, right. T-bills. Like, I got a lot of money sitting in my account right now that I'm not using. And I hold TBIL. TBIL is an ETF that'll pay you what treasury bills pay you. I don't know what it is right now, but they'll pay me in a dividend payment. They'll pay me what, 4 or 5% annualized in a dividend payment monthly. And so if I got a stack of cash that I'm not using here, I just let it sit in T-bill ETF, get paid dividends monthly for it, and then it's liquid. I can sell it whenever I want. I can do whatever when I want. I'm not an investment professional. I'm not telling you to buy anything. The treasury bills are pretty safe, you know. Yeah, bill is the same thing basically, but it's 1 to 3 month T-bills. Right, so, yeah, it's the same thing, basically. It's a little bit shorter term than TBIL, but basically it's TBIL. Yeah, it's TBIL. Yeah, it's Treasury Bond ETF that pays you annualized monthly dividend payments. Is Nvidia safe? Define safe. I mean, outside of any crazy change in business, in the business environment, long term, Nvidia is pretty freaking safe, I would say. Short term, and when I say long term, I mean like 15 plus years. Short term, you never know. Define safe. Yeah, money markets pay well, you know. All right, NASDAQ's starting to rip back up a little bit. Buy is as well. Top 3 numbers reported channels. Definitely top 3. QQQI is just a different thing. If you look at QQQI, it's volatile. It goes up and down, but all right, guys, we got the opening bell in about a minute and a half. Y'all be careful today. It's an interesting day. CPI showed up a little flat. How's GameStop doing today? GameStop had earnings. I think it settled down a little bit, didn't it? Yeah, it's out at under 24s. All right, guys. Nasdaq's ripping up. Let's watch this 2380 level. We got 24,000, a big psychological level. Here's the opening bell, but watch 24K right here. All right, here's the bell, guys. Good luck. Good luck. All right, there's the bell. Apple dipping down a little bit at the opening bell. Whoa, I'm up big today on S&PS here. I'm going to take some profit. Wow. Remember, I bought this morning, guys. You love to see it. I'm going to take some off right here. At 420, everybody's favorite number right there. All right, so we're still pushing up. We're at 425s. I bought it at 407s earlier this morning. Might take a little bit more off here, too. There we go. Hit the live button, gardening. You might be delayed on stream. Unless I accidentally said 23 minutes. I said 2 minutes, I think. A minute and a half. All right, guys. We saw a bounce where to 23.4s. Starting to see a rejection here. Watch the 200 exponential at 940s. We got 23.9 underneath this. That might be a psychological level. Mag 7 is way safer than bonds. I mean, depends on your definition of safe, I guess. I mean, long term, Mag 7, S&P, NASDAQ investments, stuff like that are going to perform noticeably better. They average 8 to 9% a year, sometimes more than that. The last few years is definitely more than that. But there's risks. It's not guaranteed. T-bill profits are guaranteed. You know. And they're guaranteed by the U.S. government. People always like to say, oh, what if the U.S. government, fails? Then you got a lot bigger problems than your treasury bonds not paying out. All right, we're at 24,000 here. Let's see if we get over this level. It's a psychological level. S&P's up to all-time highs, I believe, right now. 654.80 is all-time highs on the S&P. We'll see if it breaks. Yeah, I love to see it. I took most of the profit off already just because, I mean, it's a day trade on S&PS, but like we're up so much so fast. I'd feel bad not taking profit up here, When you're up $15, $20 a share in 2 hours. I'm just gonna lock that in. All right, guys. So again, we're kind of stagnant at the open. All right, S&P is still pushing up. GameStop bouncing at the opening bell. Nasdaq's pretty flat. All right, so we're still kind of stagnant here. Somebody asked me to take a look at SNPS, and they told me it fit within the strategy I normally use. And you know, what I always do when I look at these swing trades, it's a very easy system that I have for this. What I always do when I look at these swing trades kind of things is I look for a stock that's incredibly overextended, that's healthy for the most part. So I take a look at its EPS. I take a look at the new PE ratio at the lower price point that it's now at. I take a look at its revenue trends and EPS graphs trends. And I use that to make a reasonable assumption about a rebound potential. I did this with United Health. I bought United Health when it was at like 240s. It's now at 350s. I did this with a lot of different companies. I did it with HIMS. I bought HIMS at 41s. It's at almost 50s right now. I bought a bunch of companies like this that are honestly, I think all of these have made me money except for maybe PayPal, but I've already taken half off of PayPal. Maybe Target as well, but I think I took some profit in Target also. But yeah, basically it had a healthy revenue trend, healthy EPS trend. Its PE ratio was about 30 when I checked it for SNPS if we use the 400 or 370 number that it's at. And so all things considered, it just looked like it was going to bounce back. And so I bought it. But again, it's not going to work every time. I'm not an investment professional. I'm not liable if you lose money. Make your own assessment, figure it out. Can't guarantee anything. All right, guys, we're going to get ready to day trade a little bit here. Maybe it'll let me log in. Nope. All right. I'm seeing some pullbacks here. Bunch of bond yields jump up and down. Look at this decrease. SNPS. Yeah, I've already taken some profit, most of the profit off. I've taken probably 80% of the profit off on SNPS or somewhere close to that. Maybe not quite that, maybe like 70. I'll hold the rest of this position break even and still net a really nice profit if we turn back down. But I've got a lot of room to let this work now. Kind of want to buy this here, see if it rebounds back up. All right, we'll try. We're gonna buy right here. Maybe add a little bit to it right here. We're flat. Let's see if we can bounce back up here. Okay, we're flat. I want to let it test the 200 exponential, but I'm not gonna hold this very long. I gotta cut it right there. A small losing day trade in futures. We might actually get another. I'm gonna switch accounts. Go to this one. And then see if we can buy this again. Down here. See if it retraces the 200 exponential. It's small though. This is very small positions. We're green. Gonna take half off there. Big range. We'll let the rest work break even. There we go. Man, we're not going anywhere. I'm gonna cut it right here. We made money on the trade, but man, this thing doesn't look like it wants to go anywhere. Could we hold some of this direction, but getting big drops. We're green on all of our accounts today, which is good. I don't really trust any direction now. It looks weak, but we've had 1, 2, 3, 4, 5, 6 red candles in a row now. Watching 23.9 underneath us. Yeah, I'm in target. Target's green on the day. Yeah, we're kind of battling this 200 exponential on a short-term chart now. Apple back up a little bit since the bell. Yields are still down though. They're still lower. All right, we're still dropping here, still looking weak. Still dropping. We're at 925s right now, 925s. All right, so we're dropping down. I might buy 23.9 if we get down there. I gotta wait for it though. I don't want to jump in too early and get caught. Anthropic says it's investigating an issue with flawed Opus. I want 23.9s. I gotta wait for it, Chad. I don't want to be greedy. Yeah. Maybe I should have jumped in early. I don't know. Inflation data came out, guys. I'm waiting for some trades. We're breaking down now. Yeah. I'm green on the day, so I can't be, you know. Prefer, where's gold at? Gold's creeping up, but gold's at a very obvious trend, I think, too. So gold could start to spike. But if we take a look at gold here, right? The trend, I think, on gold is pretty obvious right now. It could break. I'm not saying it doesn't. Like, look. I'm gonna draw it myself. You know what I mean? That's the trend on gold right now, and I think it's a very obvious trend. If anything, a short here, it could be interesting for gold. But it could also break out. You never know. Not an investment professional. Where gold rejects, chat. Doesn't mean it's not going to hold here. Here's a level. Watch it. And I get time for it though. Yeah, y'all be careful. Check out Top Step. Again, if you want to help support the channel, no PDT rule in futures. You can day trade the S&P, NASDAQ, Dow, Russell, gold, currencies. Some currencies. Beautiful way to learn. Most day traders lose. You fund your own account 10, 20, 30 grand, 5,000, 2,000 even. You're probably going to lose that whole account. Most day traders do. Makes no sense to fund your own account in the beginning. No PDT rule in futures. $50 a month for the base one. You pass it, you get a 50K funded account, 90% split. They pay out millions, fund thousands. Great way to learn how to day trade when most day traders lose money. And so they also have their back to funded option where you can reset a funded account now, which is really, really useful. A lot of great rules there as well. They're a sponsor of mine. I am biased because I get paid by them, but genuinely useful for traders. Understand all this on screen. Can't guarantee anything. I'm not an investment professional. Gold is starting to push back up, so we did bounce at the 200 exponential. But yeah, if you want to check out Top Step, here's the link. Great way to help support the channel. Remember, nothing here is financial advice. Yeah, here's yields. We can put it in video up. Video's down a little bit at the open, but hit 180s. The Q is the NASDAQ. So the QQQ is the NASDAQ basically today. We'll see. I don't know. Right now, we're basically chopping big range flat. It's Thursday. JP Morgan said buybacks are set to hit new records. JP Morgan expects U.S. share buybacks to rise 600 billion on top of this year's record. 1.5 billion trades. Global buybacks have already matched last year's 1.37 trillion in just 8 months, implying a potential 1.9 trillion for 2025, 38% increase. Despite strong volumes, their relative to market cap remains below historical peaks. Low IPO activity, record buybacks are shrinking equity supply for the 4th year in a row, according to them, continuing to support markets. Yeah, hit 700 likes, guys. Listen, we're 22 away. Looks like we sold S&PS at just the right time. I'm going to cut this now. Back down to my entry. Nice little day trade. Got me up pretty big on the day. We'll take it. Definitely top 3 fastest readers ever. Yeah, when I used to go read a paper in front of class, I would speed through that thing. I lost points because of it. Gave me strikes on my papers because I would go and read in front of the class. I'm supposed to sit there and look. You know? Look at the readers, or at the audience. Instead, I just look down, speed read, and walk away. Alright, guys. Honestly, we're pretty sideways right now. We're not really doing much. Big range. We're green on the day, though. That's good. I wanted 23 nines. We didn't quite get it. I feel like I gotta wait sometimes for these levels here. We got close to it. Maybe I could have argued an earlier position, but it's okay. Yeah, subscribe, guys. Hit the notification bell. We appreciate it. Fast readers unite. You know. Target breaking highs again, up to 9160s. What were my SAT scores? I'm not going to be too specific, to be honest. Yeah, give me a follow at Beginner Trades. Yeah, there were 3,000. My SAT scores. 3,000. Obviously, I'm being sarcastic. They could have been. I'm not going to go too deep into that, guys. I don't think that's a good look, either way. Yeah, I'm just waiting for a trade. We're kind of we're sideways, so unless I'm going to short the top of the range and cover the bottom, not really interested in any of this. Harvard. Hey, later, Corey. Have a good day. Crypto looks good. Bitcoin at 114,575. Bitcoin's kind of flat on the day. I mean, it's green, but it's flat since the opening bell and since CPI data. Gold's creeping out of this range, though. Nvidia looks like it wants to fight its way back up, too. Market's kind of slowing down some, to be honest. Hey, we got almost 30,000 views for this stream. I appreciate the love. Thanks so much for watching CPI with us. Remember, next week's FOMC meeting's big. Of course, we're going to be here to cover it. Yeah. Nasdaq pushing up to almost 980s. Apple driving us a little bit. Nvidia pushing up too. Yeah, S&P. Now at all-time highs, 655.18s. You take a look at the S&P, 65.61s on the S&P. I mean, all-time highs on the SPY, 655.18. S&P broke all-time highs again today. STEM degrees are usually pretty solid. I think jobs everywhere are going to get replaced by AI eventually, but I think STEM's pretty safe bet. Depends on what you're doing for it depends on the person. Don't get philosophy. Communication's pretty bad too, I think. All right, so look, we're rejecting at 980 here. Maybe I should start entering like a tad bit earlier than my levels. Look at this. Basically touched 980 though. Let's see if we bounce at 55 here. We also have 50. We also have the 200 exponential right there. All right, guys. I'm probably going to shut it down. Again, check out Top Step. Great way to learn how to day trade. Most day traders lose. We're green in every account that we've traded today. We've traded a combine a little bit. We've traded 2 funded accounts. We are now green on all of them. Thanks to maybe some gold trades, some NASDAQ trades. We're now green on all of them. Market's too sideways and rangy after inflation data. And then tomorrow is Friday, so it'll be an interesting day. When's the next... Okay, the next quad witching day is next Friday. Triple witching, but they call it quad witching still. It's next Friday. So we'll see what happens then. S&P's breaking all-time highs. Yeah, y'all be safe. Listen, check out Top Step. Beautiful way to help support the channel. They're a sponsor of mine, of course. Understand all this stuff on screen. I can't guarantee anything. I'm not an investment professional. I'm not liable if you lose money. Make your own assessment. Trade smart. And yeah. S&P consistently breaking all-time highs right now is what we're seeing. S&P 500 up to 65s here. Listen, as soon as I close the stream, it's going to bring you to tomorrow's stream. And as I always say, if you don't sit around waiting until tomorrow, I'm judging you. You know, I expect you to go to this next stream, sit around, wait until tomorrow, and no bathroom breaks either. Just joking, kind of. But I expect you guys to wait. If you don't, I'm watching. Okay, just know I'm watching. I'll see you guys tomorrow.